Well, Saudi Aramco's initial public offering expected next year will be the biggest in history. And the fight among investment firms to be involved is intense. Well, now there are reports that the state-owned oil giant's chosen a boutique investment bank in New York as its main advisor. They're going to make a fortune from it, as Azhar Sukri reports.
For a relatively small Wall Street firm, Moelis appears to have bagged the deal of its life. Saudi Arabia's state-owned oil company has selected the investment bank to be the sole independent advisor for its initial public offering, expected sometime next year. The Saudi Aramco share sale is expected to raise around $100 billion for the government and would give Aramco an estimated market value of more than $2 trillion, bigger than many of the largest US companies combined. One of Moelis's tasks will be to select the stock exchanges on which to list the shares. Saudi Arabia has said it would carry out the listing on its own Tadawul exchange, but it also plans simultaneous debuts elsewhere. New York, London, Tokyo or Hong Kong would be obvious choices because of their size and access to massive pools of money. But the scale of the IPO means there could also be enough business for niche markets. According to media reports, the Singapore Stock Exchange has been in talks with Aramco for a secondary listing. If it succeeds, it would allow Singapore to highlight its status as a leading oil trading hub. Government data indicates that 80% of the world's top 30 oil and gas companies have a presence there. And it's located near shipping lanes between the Middle East and large energy consumers, such as China and Japan. After a steep drop in prices since 2014, Saudi Arabia is trying to reduce its dependence on oil. Selling a stake in Aramco will give it the funds it needs to transform its economy. For banks and investment companies everywhere, it's an opportunity like never before. Azhar Sukri, TRT World.
And Azhar is in the studio with us now. Azhar, what kind of name is Moelis?
Oh, that comes from Ken Moelis,
Okay.
the guy who runs the thing. He's actually a former UBS president of investment banking. He set up the company in 2007. Look, why has this company been picked?
That's what I want to know.
Let's look at some of the deals that they've done to give us an idea of where they come from. So back in 2007, they advised on the acquisition of Hilton Hotels by Blackstone. That was a deal worth $26 billion. In February 2013, they were on the deal of Heinz being taken over by Berkshire Hathaway, Warren Buffett's company, and 3G Capital. The value of that deal, $23 billion. And they also have significant expertise in the Middle East as well. So 2013, they advised Saudi Telecom's Indonesian unit on a $1.2 billion loan. So also lots of experience in Dubai and the other UAE.
I think it's important, isn't it, to have that Gulf experience because people get to know you, they get to trust you and so on.
Absolutely.
Let me ask you about the fees. They're going to be opening the champagne at Moelis for sure. What sort of fees are we looking at?
We're sort of in uncharted territory in a way. I mean, typically, right, for advisory firms, anything above about $30 million, they will charge about a quarter of a percentage point, quarter of a percent. For underwriters who carry a lot more of the risk, they can charge anything up to about 2% on deals above $10 billion. This is out of the stratosphere in terms of those values. So it's difficult to say exactly how much they will earn. But in total, the underwriters and advisors are expected to get a total of about $1 billion.
Okay. Let me ask you very quickly about oil prices. Once upon a time, 140 odd a barrel. Now around 55. Is that going to hurt?
It could do. Following the OPEC deal at the end of last year, prices got a bit of a bump up to $58. But, you know, that just had the effect of bringing on the shale oil producers back on again from the US. And that's pushed prices back down. So it is going to be interesting to watch that as we get closer to the IPO
valuation next year. Okay, Azhar, thank you.